Hello traders, this is the weekend video, the bigger picture one, in which I'm going to go through daily and weekly charts of German DAX and US indices. Like always, I'm starting with the German DAX. If you find this part boring, you can skip to the US indices. The video is going to have timestamps. And here, what happened on DAX was that this was Monday, Tuesday, Wednesday, Thursday, Friday. So this was the week in play. And that, in my opinion, key point of this week was made on Tuesday when market staged a false breakout over the previous day high and above the upper end of potential bull flag. So we got false break over previous day high and also false break of the bull flag. Parabolic move was made into that references and momentum died at 10. At the same point in time, 10:05, SAP as second DAX index component went down, and DAX completely mimicked that move from the SAP. And after that false breakout, we got true gap down and go on Wednesday. So Wednesday was a consequence of a false breakout. False breakouts are always more bearish than outright drops from resistance, and false breakdowns are always more bullish than outright bounces from supports, because both of them present traps, and both bull trap and bear trap means that somebody is trapped there and that somebody is going to be liquidated when market turns and go the opposite direction. Thursday and Friday were days in which market traded between two large time frame references, between the gap and daily 20, which was hit repeatedly outside of the regular trading hours. You see that index never tested daily 20, and that is something to watch for the next period. So this video, like every other video, is going to tell you what happened before and what we are looking at for the next period. So for DAX, we are looking at this. This is futures, and futures here, you see this, what I made a ellipse on. Sluggish down movements, mechanical trading, not much of a panic, after which we got the bounce. Can that be the case again? And what needs to be tested to get a bounce like this? And is it going to happen at all? Because what was May high? May high was also a upthrust or false break above the February high for 51 point. And 51 point on futures, I'm talking about futures here, 51 point on a daily chart is nothing. It is a good catch for day traders and scalpers, but on a daily chart is nothing. And May high was Memorial Day, which was also with Monday. So double holiday, market used that lack of volume and liquidity to push higher, and that was a failure. So behind this down move, we actually have two failures. May high as a fail and Tuesday high as a fail. And this, what we can see here, I will go blank now, this Friday candle with huge tail above and huge tail below is looking like this because settlement is here set for a close of a daily interval. Future settlement is equivalent of on futures is equivalent of index close for index. And knowing how this is calculated can also help you to understand why, if we now turn off this, we are going to get a completely different candle, because this candle is using last price as a close, and this candle is better in describing what actually happened on Friday, which had a catalyst after which we got a sell-off, and that catalyst was a NFP report. Now, settlement, you can find all about settlement, and link is going to be in the description on the official Eurex website. Here is the link, and if we now go to specification tab and scroll down, you can find settlement, and daily settlement price is derived from the volume weighted average of the prices of all transactions during the minute before 17:30 Central European time, and this is the time when the index closed. This is the time when a regular trading hour session is finished, but futures are trading to 22 CET, meaning 10 p.m. Central European Time. You can also search futures settlement on my public X profile, find more information about it, find how to put that line on your trading view account, and also how we were using futures settlement in day trades. There are also some examples of that as well. Now, let's move to other markets. For days and days, I was talking about how we need to see support breakdown on these indices going higher and making all-time highs every other day, and that happened only on Friday. And you can see that previous high from Thursday, May the 14th, was a support on Thursday. And on Thursday, market happily pushed higher from it. They were still bullish. But on Friday, US indices confirmed the down move on the NFP report, which was also the one responsible for spiking of 10-year yields. And then markets went down, and the most down moves were on Nasdaq, which is tech heavy, and AI and semiconductor names were down, and on Russell 2000, which is more sensitive than any other US index on the yields. And this is the comment that I made on Thursday, also speculating about the SpaceX IPO and how that is also the thing that can be behind profit taking, that the people need to release funds for it. But with or without this, market would still go down on NFP report alone, because they were not due, but overdue for the pullback. However, guessing and telling on it every day, okay, market is overbought, you see where I'm getting at? You are guessing. And then if you sold it here, that would be very, very expensive. The better way, in my opinion, is when market is doing this and making all-time highs every other day, is to wait for that said market to give you a setup, and this was it. In case of Nasdaq, they broke the previous resistance, which acted as support, and they broke below daily 20. Similarly, like on DAX, now for S&P and Nasdaq, we are watching previous support here. This was the thing that both Nasdaq and S&P made on May the 19th, where they poked below the previous week low. That spring below the previous week low, remember that, in the up legs, spring below previous week low, previous session low, overnight low, all of that are long setups, and as we go higher from overnight low to previous session low to previous week low, they are more powerful. This was again below the previous week low, and look what happened next. Was market overbought here? Yes, and they still went higher. One of the ways how you can gauge is market overbought or not is how much of a distance is between the price and daily 50. And this isn't anything scientific. This is the thing that I just observed during years and years of watching these markets, is that when they go like 7 or 8% above the daily 50, they're overbought. Guess what was happened here? 12%. So again, it's very dangerous to guess. But this, as this happened, and the down move was well after the US market opened. Let's go down now to Dow Jones. This high of a day was made as a poke below the previous session high for 3 points only. 3 points on instrument that trades prices more than 50,000. 3 points. Great sell setup as well. Then they followed other US markets, while Russell, not only that it had support breakdown, it also had a balance breakdown and closed below daily 20, which again means for the next period we are watching daily 50. On Russell and DAX, we are watching daily 50. On Dow Jones, we are watching previous all-time high, what can happen here on test, false versus a real break. And on Nasdaq and S&P, we are watching first this support, then we are watching daily 50. Because some support levels were made only in this upper part, while in this here, nothing much. And when we go now to the higher time frames, we can see the difference between DAX and US markets. While these are the two last weeks on DAX in which they barely went inside this humongous week from the mid-May, situation is different on the S&P. S&P had 2-week balance, and the previous week they made breakout to new all-time high. But what happened this week? Weekly high is a false break over the previous high and going back inside this 2-week balance. Again, this has to go to see the move toward the daily 50. And then, while we are at this move, it is also a good idea to make a fib on it and to conclude that, hey, halfback of this entire move is in line with the previous all-time high. So by combining two charts, daily and weekly, you have 3 points of interest to the downside. Previous support, daily 50, previous all-time high. And same is for Nasdaq. 2-week balance, breakout to new all-time high, false break, going back inside the 2-week balance, and again, previous support, daily 50, previous all-time high to watch. On Dow, previous all-time high to watch. On Russell, if they go down, again, previous all-time high to watch, because from it already bounced 2 times. And we know that supports aren't going to be stronger by testing, they're only going to be weaker. What are the things and potential catalysts for the next period? There is nothing scheduled on Monday and Tuesday, but then the show program starts with Wednesday and the US CPI, which can move the markets now, because now markets are not only news driven with US-Iran news, but also volatility driven, because VIX went up 40% on Friday, and some of that volatility likely is going to stay for the next week. So US CPI on Wednesday can move the market more than in the previous period. Then on Thursday, there is US PPI, which can also influence. And that particular data is right between ECB policy statement and rate, which is expected to be increased and which is already calculated into the price, and press conference in which Lagarde can say something about further guidance. I wouldn't really hold my breath much about that, because Lagarde era is completely different than Mario Draghi era, because in Lagarde era, ECB days are in 99% of the cases nothing burgers, something that cannot move the market, because they move on to a more transparent method of working, where everything is well known and well in advance to their meetings. So they are very careful to not say or do something that could shock the markets. Therefore, we have those US data, PPI and CPI on Wednesday, so especially CPI. And then on Friday, there is preliminary consumer sentiment and inflation expectations. Nothing much to say about that. CPI should be considered as the big dog for the next week. And also take note of the SpaceX IPO, as I read it should be next Friday, and profit taking to release some funds is still a viable speculation that can influence some more downside if we see one. So that's about it. Link for that DAX Futures Settlement is going to be in the description below. As always, I wish you a pleasant weekend, good trading, and see you next week.